M chart pattern or double top chart pattern is usually known as a price action chart pattern, which is a bearish reversal chart pattern. Generally, it occurs after an uptrend movement. If you read this definition, M formation, also known as double top, is an M-shaped chart pattern. M pattern is a bearish reversal pattern. When the pattern appears in an uptrend, it indicates that price will reverse and start moving downwards. The M pattern consists of two tops and a neckline. If you see these two are the two tops. The two tops may not be at the same line. It can be slightly lower or it can be slightly even higher also. When the neckline is breached and the candle close below the neckline, this is the neckline. If you see, this is gone up and come down and touched this neckline, and again it tries to go up. It took a resistance here and tried to come down here. So traders can start shorting the stock or F&O and place a stop loss order above the neckline. So above the candle which is closing below this neckline, we can keep a stop loss above this candle or even above this neckline candle. M formations can be identified when price action meets a resistance point, goes down to favorable price for bullish traders who push the price up again, and ultimately that resistance point forces the price lower than the previous low. If you look at this, after an uptrend, it tries to move upward and took a resistance here and came down here, touched the neckline, and again it tries to go up. Again, it took a resistance and came down to touch this neckline. So here, the neckline is an important level as it serves as a significant level. It's important to note that you should always wait for a breakout and candle closure to avoid trading false breakouts and unfinished patterns. So we should wait for a closing below this neckline. If it gives a proper close below this neckline, only then we can take a trade. After the breakout, the neckline serves as a helper for placing stop loss. Stops are usually placed right above the neckline. Our stop loss can be here, our entry can be below this neckline of the candle which is closing below this neckline. The stop loss can be the high of the closing candle. So here we can expect a risk to reward as 1:2. So we don't have to wait for target of 2 times. The moment it starts going down, we can start moving our stop loss to cost to price, and then we can certainly move towards our target. So we can keep trailing the stop loss. Let's go and see in the chart. If you look at the Bank Nifty chart of 16th date, so you can find from here it moved upwards of, see, this was the high. If you see from this point to this point, which is almost 260 points stop loss, 260 points movement from down to up. So later it moved and came to this level. This is the neckline, and again it started going up. It took a resistance here. If you see the resistance, one point here, another point here, this is the top, this is the double top, one top here and the second top here, and this is our neckline. So our trade could be initiated below this candle. If you see, this candle gave a close below this neckline. So my stop loss can be here, top of the candle, and if you see on the Bank Nifty, it is 82 points. The risk is 82 points. The reward is almost double of that, 1:2, 162 points. See, it never even tried to cross above this line, but it took a very good resistance above this and tried to go below and try to touch this bottom of this resistance. So we can see on the option also, option chart, how it worked. So let's see, this was the neckline closing candle. Corresponding to this, we can see a candle here. This is the candle. This green candle is the, so this green candle, this green candle was the trigger candle, and my and our trade could be initiated above this. And if you see, the stop loss and target was almost the 40 points to the below this candle was my stop loss. If you see, 30 points, my target could be almost double of that. If you see, 40 to 40, 80 points target, almost 1 is to 2 targets could have been achieved here on the option side. See, the points here is 159 to 160 points or the target. My stop loss could be here above this candle. The closing candle was here. So 83 points was the risk and 167 points for the target. Same way, if you see, this is my candle. The high of this candle is my entry price, and the below is the target price, 39 points. And here the target target to stop price is 1 is to 2. So almost risk to reward. Risk was 40 points on the option chart, and the target was 80 points. So the moment it started going up on this candle, we could have brought our stop loss from this to this level. My stop loss could have been here. Later, I could have achieved my target of 2 times, which is 1 is to 2. So as you can see, this M pattern could be a very good price action chart patterns, which works out almost more than 60 to 70% of the times. For example, if you take some 10 trades, out of 10 trades, at least 6 to 7 trades could be in our direction. Only some 3 times or 4 times out of 10 times we could lose our stop losses. So keeping that in mind, so every trade should have a stop loss, because so every time when we take a trade, the stock price can either go up or go down, or it can go remain in sideways. So in case if a trade goes in our direction, we can make a profit of 1 is to 2. In case if we lose this trade, we can lose in 1 trade. So out of 10 trades, even winning trade is only 6, whereas 4 is losing. 6 is winning trade and 4 is losing trade. Still, end of the day, you will be with at least some profit, assuming, so every trade, if you make some 80 points of 6 trades, and you're losing 4 trades of 40 points, so totally you will have 480 points as the winning points, and 40 into 4 is winning points are 480 points and losing point 160. End of the day, you will be left with at least some 200 to 250 points. So this is how this M pattern works out. It's one of the most important chart pattern and very powerful chart pattern. And only after an uptrend moment, if you could take a trade, you can make a good profit out of it. See, since there was an uptrend moment from this to season 260 points, after that the market could not go up and it started forming an M chart. So because with this we can get a very good trade here. To learn more such chart patterns in live marketing, join me every day during the market hours 9:15 to 3:30 to learn more about such price action chart patterns. Stay connected with me, subscribe my channel,